Hey folks, Bob Desmond here over the Contrarian Trader, and welcome to Thursday Stock Market Live. The purpose of this video is to go over what I do on Thursday evenings in particular, and that is to take a really close look at the weekly charts to identify how we're closing out the week, what's breaking out, what's not, and what's breaking down. And that helps us get in front of the new trading week, and all we need to do is meet up. I usually do this with members on Saturday, is that we will do the week ahead commentary where I do a review of the markets, the major indexes, then the sectors, and then we talk about the standouts. What sectors do we like? What don't we like? Then we'll talk about our positions. Do we want to add more? Are we looking to trim, etc.? So this is really like the first phase of our analysis as we begin into next week. So it's very, very proactive what we're doing here. So hello to everyone. And in the future, I'm probably going to make this by invitation. I'm going to drop this link to our email opt-in list. You will not be spammed. I don't want any other personal information other than first name and email address. Hey, good evening, Sam. You're a workaholic like me. What time is it there now? He's over in Italy. Sam is over in Italy. He's on YouTube if you watch us on Twitter. If you're already on our email list, no need to add your name, but I'm probably going to make these more of an invitation only to keep the groups tight as we become more and more populated with new members. I want to have more private sessions so that way we don't have 12 p.m. Midnight, you mean, right? Right? So we're going to have private sessions, long story short. So hit that email link in the chat box. Join up for the email list. And if you're watching this on the replay, it'll be in the description area below. If you watch this on YouTube, if you're watching on the website, also it'll be linked below. So, well, good to hear you again. Well, you were on this morning too, right? It seems like years ago. But here we are. Here we are again. Sam joins me in the morning at 5 a.m. And now here we are, I don't know, 11 hours later, doing the same thing, even more than that, 11 hours later. So welcome, Sam. Welcome, everybody else. And what we're going to do now is first we're going to talk about the after hours action. We had Twitter that came out this morning first before we talk about Amazon. Horrible numbers, bad numbers. I mentioned, not last night, but the night before, real earnings would begin on, today is Thursday, Wednesday. That's when you had the millennial names, the headline names that the millennials relate to announce earnings, and they have not been good. It's been fairly poor. So Amazon reported after the bell. They are not looking all that well. They are down dramatically. Last tick was 1663. They closed out the day at 1780. What a mess. So this is not going to bode well for the markets tomorrow. But you know what? The fact that the Federal Reserve had to be even more aggressive today in the markets to keep the banks liquid, that did nothing to stocks. They shrugged it all off. Quantum surprise. I read that. Yeah, the article was, the headline was, if it's true, it would be the biggest development since the Wright brothers flew the first airplane. What Sam is referring to is that Google developed a computer that would take, like, Sam, correct me if I'm wrong on this, like 200 years for an individual to do, but it does it in like 10 seconds. It's crazy what it's doing now. So quantum computing is here in a very, very big way. And thank God it's an American company that's in front of it. The Chinese are certainly on it, and we really need to be ahead of them. Thanks for that, Sam. Appreciate it. RL, hey, good morning. Yep, 5 a.m. Yep, RL's always there too. So junkies like me, good to have you. All right, cool. So earnings are not good. Yet, let's take a look and see if the futures are reacting at all here. Yeah, right. Right. 10,000 years. Right. Yeah, that's crazy. That's crazy. Okay, this is going to play with me now. It's being unresponsive. Let's take a look at the NASDAQ first, how we're looking. We're probably going to go for about a half hour tonight. Then members, I'll say this a couple of times. We're going to meet up at 7 p.m. tonight. We'll do a group private session. So I'll send out via email a link to the private session. So expect that immediately following this commentary. All right, so, no response. No response. My guess is that when you have earnings reports like this and you have Amazon beat so poorly and there's really no reaction on the futures market and it's ticking up, you probably have the plunge protection team in there putting a bid under this market. The mid caps, they're up after hours. No response. S&P down a quarter point. Nothing. No response. It's as if Amazon wasn't a big player in the markets. Crazy. It's also very crazy. This is Orwellian, what is going on now. So what I like to do here, hey, Terrence, where you been, man? I haven't seen you in a while. I heard from you in a while. How you been? This is a long-time member. Long-time member. Great to hear from you. Jesus. Good to hear from you, Terrence. Wow. Let's see. Let's go over the weekly charts. This is the purpose of tonight. Let's focus on... Good to hear, Terrence. Very good to hear. Thanks for joining. Appreciate it. Oh, and as I say that, if everybody can hit the like button on YouTube, please, or if you watch us on Twitter, share with a friend, whatever you do on Twitter, comment, whatever. Anthony, how you doing? Great seeing you. Great to have you here. Great, some long time, wow, some really, I get goosebumps right now. You can see the goosebumps. I see the Terrence Johns and Anthony on. That's great. Oh, Intel, that's right. They reported earnings. Let's bring them up. All right, so it's an influencer, no doubt about it. Yeah, smiley face. All right. I'm doing great, Anthony. Thank you very much. Better that you're here. You guys are here. Really appreciate it joining up. Thank you. So, yeah, great point. Intel is up. That's definitely influencing the markets. And we're going to go to a chart of the semis in a moment on a weekly chart. I already breezed through them really quickly just to update the annotations. And the semis are looking rock solid. So we'll go to that chart in a moment. So let's go to the weekly charts. The way I like to kick Thursdays off with, and it's on the week ahead commentary as well, is I like to get a feel for where we're at. And for those that are new to what I do and how I look at things, it's a bit different than other people in that I use history a lot as a guide for where the markets have been and where they may be going and what are the influencers. And I like to identify the influencers on the current market cycle. And the big influencer on the current market cycle is the bond market. And I repeat this over and over again to the point where members are probably disgusted with it, but it's worth repeating over and over again because this chart here is the current market cycle that began back in 1981, including the dot-com crash, including the financial crisis. This rally in the bond market, the 30-year bond, has been what has allowed this economy to revive and to continue to grow. Unfortunately, it's on debt. Now, 10 years prior, or about 8 years prior, no, 10 years, because this began in 1981. We went off the gold standard in 1971. Prior to that, prior to going off the gold standard, I mentioned this morning on Swing Trading Today, you needed one person to go to work. One person. The economy was able to rally on organic growth and go into recession because growth just wasn't there anymore. That all ended in 1981. Hey, Bill. Good evening to you. Thanks for joining in. That all ended in 1981 when the bond market became the enabler of the American consumer to not only compensate for the fact that you had no longer the ability for most Americans to be able to send out one person to go to work and support a family of. Remember, when I was a kid, my friends had 3 and 4 brothers. I mean, our Irish Italian neighborhood I grew up in, and you had 3 or 4 kids in each family. Now, you usually have 2, right? So you had one father, multiple kids, and what do you have now? You have 2 parents, latchkey kids, and the only way that people are able to make ends meet is by being able to throw it on a credit card. Most people in the middle class, and especially the poor in the United States, cannot afford an emergency bill of $400. The only way they're able to do it is with a credit card, and this is it. This is what is at current the American dream. And we are in an uptrend channel. You could say I've overlaid here the S&P 500, and the S&P 500 has rallied along with this beautiful, beautiful bubble. But this bubble began to burst right back here when we broke down below in September of 2018, below the lower band of the rising uptrend channel. We have done it before. Back here, back here, back here, not here. We tested it. And that was pretty much it. But we never closed down below the lower band of the rising uptrend channel until September of 2018. That was an alarm bell. We were talking about it then. We took notice of it. And ever since, while I've said that going into the 2020 elections, this market will rally or at least not correct, and I stand by that right now, I am very, very concerned about this chart. And they can keep this chart looking the way it is right now. And I'll drill down now that everybody's had a chance to digest the historic view, the macro view of the 30-year bond price. Actually, I'm sorry. This is not the S&P 500. This is gold. This is gold overlaid here. I apologize. And you can see that gold has been ripping because it's inflationary. The value of the dollar of which gold is priced in continues to decay because we're no longer on the gold standard. What's stronger? Gold. So we're going to drill down here really quick. I didn't plan on spending too much time on this chart, but it's worthwhile just to get a feel. And this is for the benefit of new watchers out there, just to get a feel for what's in the back of my head when I'm analyzing charts. And you can see that now that we've drilled down to a 20-year view, we have had a major rally off the lows. This is when the Federal Reserve was, for all intents and purposes, done. And we've had a major rally. The question is, now that we've rallied up and into the upper band of resistance where we peaked out here in August of this year, and now we're pulling back, have we seen a double top? We don't know. We can't draw a conclusion. For all I know, we're pulling back. We're going to put in a higher low, and then we're going to move higher. I'm not that smart if we're going to break down below this prior low here. Because if we do, the American dream as you know it is done. It is done. And it's going to be a very, very sad state of affairs in this economy. And as I mentioned before, you have gold overlaid here. And I pointed out this morning that the Germans on Swing Trading Today, Germany for the first time in 21 years has been a net buyer in 2019 of gold. So you're beginning to see green shoots, as Larry Kudlow used to say, green shoots of the realization that the only real money out there is not fiat currency, including the dollar. The only real money out there is gold, silver, precious metals, anything that you could drop on your foot is in some form of fashion a currency. And that's my long tale of woe here of the U.S. 30-year bond price. Now let's take a look at how we look on a weekly basis. And I won't spend too much time. And if you have a question about these charts, ask it. I'm here for you. Please do so. Weekly chart, 30-year bond, new weekly low. We want to see a rally in the bond market. We want to see the price of gold move higher. And you're seeing that. They're trading in tandem. Oh, well, this is the S&P 500 now. Duh. Let's throw up gold as an overlay here. And we will make it gold as it should be. And you can see, tick for tick with the bond market, the price of a bond, not the yield, but the bond price, gold is moving up with. Now we're beginning to consolidate here. We're off the lows of the week. We're still down. So the jury is out about what the bond market is going to do. Gold had a great day today, a really good day. We closed out the day above the 1,500 level. Clouded Trader, hey brother, good to see you again. Welcome. Laurent, hey, how you doing? Did I get your I have a bunch of emails to get to. I'll check it again. I may have. I'll definitely get to it. All right. You must have sent it afternoon yesterday because that's the last time. Actually, yesterday morning was when I checked it last. So you probably sent it last night. I'll get to it, guaranteed. So we're off the lows of the week. We're not positive yet, so the jury is out about the weekly performance of the 30-year bond price. But as I mentioned on that monthly chart, not looking good. The VIX, weekly basis, we are weak. We haven't taken out last week's lows. This is a key support level now at 1341. You got. So the VIX holding support, no new weekly low, but down on the week. The 10-year yield, this is really interesting here in that we are rallying at current, or we have rallied up to the upper band of this declining downtrend channel. Forget this lower band. Pay attention to this upper band here. They coincided, and you can see that this is now beginning to act as resistance. So we're off the highs of the session, the weekly session on the 10-year yield. That bodes well for our gold and gold mining trade and silver trade, because if you have yields rising, that does not bode well for gold and silver, because usually the dollar is rallying as well, and that doesn't help our trade. So I want to see a recovery in the bond market. The Dow transports, weekly basis, a really great week early on, a bit of weakness yesterday, and we are off the highs of the week. We are right up, or we were right up and above at one point the upper band of resistance on a weekly basis. So what I want to do here, well, before I leave this, we broke out yet again on RSI. So we may have an indicator leading price performance. No reason to go buying, it's just an observation. We had done this before back here. We broke out the week of September the 9th on RSI. We looked great on the chart, but then we rolled over, as did RSI. So I would not buy on this event. Too much risk out there right now. Way too much risk. I don't think the market's priced it in at all. At all. So here we go. Very tight range here. We're looking for a break below this support level on the transports. The transports have been a leading indicator for us, for the market. And usually this is one of the first charts that I go over each night on Market Wrap because it's a leading indicator. And I'm a big believer in the Dow theory. As goes the transports, so should go the Dow Jones Industrial Average and vice versa. So we're seeing some topping action here on the transports. And to be honest with you, I haven't looked at the daily chart yet of the transports. I will in a little while. Weekly chart, Dow Jones Industrial Average. You can see that we've been putting in a sequence of lower highs here. No breakout yet. We attempted to last week. We have no new weekly high this week. We are down below resistance. Stokes look fantastic. They're putting in higher lows, exactly what you want to see. RSI, same deal. And, oh, here's that, before I forget. If you're new and you're not on our email list, please join it because I'm probably going to have private sessions in the future. I'll pop that in there. I forgot to do that before. Maybe I did it before. Am I losing my mind? Oh, I did do it before. Okay. Sorry. When I go live, I get nervous. All right. So higher lows on RSI. No breakout yet. Healthy, though. Healthy. With all the bad news out there, the fact that this market, meaning bad news in terms of macroeconomic data and earnings, which have not been great, it's amazing how this market is holding up right now. One has to wonder why. Why? Plunge protection team, maybe? SPX, weekly view. Let's make sure this is updated. We are up on the week, obviously, and we're right up and into the upper band of resistance here. So again, no breakout. I really want to focus on getting aggressively long of the market if and when we do break out above the upper band of resistance. We close out the day well above 3,000 again. The markets continue to shrug off what should be a very, very big warning signal for the market. The fact that the Federal Reserve, not only did they go in and have to provide more liquidity of $120 billion today, they had to exceed it. It was oversubscribed. I think the number was, I posted it in the forum. What was that figure? I posted it. Damn it. I meant to have the article up. I know it was well in excess of the here we go. This is me. I'm live. Here's my wife, folks. I'm live. You're being watched all over social media right now.
Hi. Hi.
Okay. So the Fed injected $134 billion today. Not 120, $134 billion. Why do you get nervous? I work in TV news, and I think you agree. Oh, thank you very much. I appreciate that. I don't know. You know what it is? You know what it is? It's a great question. I normally do. You hear that right there? It drives me crazy. Normally it takes me a half hour or more to edit out all the ahs. So I hate doing that. So I'm very self-aware of it. And I worry about faux pas. You know, live TV is great. It's great. I guess you get to know people better because it's not edited or scripted. I have no scripting here. I'm just impromptu. And I worry about that in a way. It's good to have a safety net. There's no safety net here. In a way, it's good, but it's fun. I got to tell you, I love this. I love this engagement. I've waited way too long. Hello, Mrs. Contrarian. That's great. That's great. I'll tell her that. She left, but I'll tell her that. So, 134 billion. The markets didn't blink. Thank you very much. I appreciate the vote of confidence. I appreciate that, Clouded Trader. So, how the markets are shrugging this off, I have no idea. But we bought into the S&P 500 this week, and you may be saying, Bob, isn't that hypocritical of you to be buying the market? And no, it's not. And the reason why I say that it's not is that we're hedged in a very, very big way. Because if this market goes, now I have to put this in air quotes. I hope that I'm right? You don't know until you know. I hope that our large concentrated position in the gold mining sector is going to come save the day. And you could see that today was a perfect validation of that thesis. So at current, I'm watching these little blips on the screen. I'm watching these headlines and I'm saying, okay, if the market reacts negatively, is our hedge working? And today it did. So we'll keep monitoring it. And we do plan on adding more to silver, gold, and if the S&P 500 breaks out, we'll add to the S&P 500 or the semis. I'm going to go to a chart in the semis in a moment. She actually does want me to take out the garbage. That's the funniest thing. So you hit the nail on the head. She'd be laughing right now. Miguel, hello, big fan of yours. Work home someday and I reach out some part of your knowledge. Join us. Yeah, absolutely. What is your provision for CAD, the Canadian dollar versus the Swiss franc? I'd have to bring that up. So if we get a moment, I'm on a tight deadline. I'll bring it up for you, but I have a few charts to get into, and I'll take a look at it. Arthur, how you doing, brother? There are a lot of members on here right now. Folks, we're going to go into a 7 p.m. live stream Eastern Standard Time. I'm going to send you guys out a link. So if you have member stock chart requests, get them ready. We'll go over them at 7 p.m. That's why I'm on a tight schedule. Hi, Bob. Amazon, one of the biggest components of the QQQs, SPY down. Why are you looking to get long? The reason is, Arthur, is that, and I'm subject to an opinion change, but the charts will tell me when I'm wrong, okay? And right now we opened up a long position this week, one opening position, a small position, scratching the itch because we saw some positive price action. We have not added to it. I do not plan on adding to it until we get a breakout on a weekly basis, and that's the reason why we're taking a look at the charts from a higher level view, not a 15-minute chart or a 30-minute chart or a 4-hour chart or a daily chart. I don't care about those charts. I'm very skeptical of this market, and I want to see a breakout on a weekly basis before I get aggressively long. Because I think that yeah, Bill, you're right. We went over that a little while ago. Yeah, Amazon's getting hammered. I think that going into the 2020 elections, that they are going to prime this market. I think that what you're seeing right now with Fed liquidity is nothing. They're just opening up the spigots a little bit. What we saw back during the financial crisis in terms of QE1, 2, 3, Operation Twist, all that shenanigans, that is nothing compared to what we're going to see, because that little bubble has grown into a massive bubble. Remember they had too big to fail back then? Guess what? There are less too fewers to fail out there now, and they're even bigger than ever. So, folks, this is like the end run for the next, I don't know how long they can keep this going. I'm not that smart. But at some point in time, the chickens are going to come home to roost, and you got to be positioned. And that's why we're so aggressively long of the gold mining stocks and building a position in silver. And we could be getting long of gold. We're not long of gold. I talk about it all the time. But there's more beta in the gold mining stocks, and I could sell covered calls against it. So that's why I like the gold mining plays. So let's get back to the weekly charts. We kind of get off track here. And I'll blow through these really quick. The semis. This is a beautiful chart. When you take a look at this chart here, and now you have to think about Intel after hours, right? So, which they had good numbers apparently. So last week, well, we broke out here out of this bull flag setup during the week of October the 7th. Last week, a bearish reversal a week and a retest. This week, another retest and a bullish key reversal. This sector here, and I even mentioned it on the week ahead commentary last week, we're looking at the semis to get long. So as I'm deciding what to get long of, I don't want to buy regular stocks to get long of in a concentrated position. I only want to buy ETFs. That's it. SMH or leveraged ETF, putting you long of the semis. The S&P 500, we're using a leveraged ETF there. What else? Healthcare, weekly basis. So leaving the semis, I'm very bullish on the semis. Healthcare, I was hoping for a breakout this week. We didn't get it. We're off the highs of the week. So I want to buy the healthcare sector. In particular, I'm looking at Cure. I believe it's Cure or Care. I always get confused. It's Cure. I'm right. So we're looking for a breakout here on Cure. It's not happening yet, but it's on our watch list. We're going to stay. We're going to get long of this on a breakout. Oil, weekly basis. How are we looking here? We have a weekly breakout. This is a beautiful chart. Not only do we have a weekly breakout. We've engulfed the prior week's price action. We are at current above the upper band of resistance. And I predict that in all probability, if we close out the day or higher, the next resistance level is going to be here. This is the USO. That puts the price at, let's call it $12.75 per share on the USO. How that correlates into the price of a barrel, I'm not sure. And taking a look at the indicators on a weekly basis, RSI, higher lows, beautiful. We're above 50 on RSI, thumbs up. Oil looking outstanding. Stokes are hooking up. They're a little bit iffy here. Volume this week, meh. Not much happening there. So this is not a buy to me yet, but perhaps soon. Now, I want to bring up natural gas. I wasn't going to speak about it, but now that we're looking at oil breaking out, copper breaking out, you have to start thinking about the I word. And the I word is inflation. UNG, we're quite probably putting in a higher low here on nat gas. No breakout yet, but we'll be watching it. You had corn, I believe that was breaking out today. I was watching some of the commodity plays. Energy sector doing well. Oil's doing well. Nat gas appears to be bottoming out here. So energy looking good. No breakout yet. It's a watch. Higher lows on RSI. How's our volume? Meh, no good. So there's a question mark next to energy. Oil light volume, energy light volume. The utilities, they should be doing well. Why is this not popping up? Okay, there it is. And they are doing well. So the utility sector, hey, my first, I use a program now because I stream to, I'm fascinated by this, so you have to forgive me. I'm going to go away from the charts for a second. I wish I could show you. I have a program. I can show you. Here, I could do this. Watch, I have multiple monitors here. So I have this. Here is, I use a company called Realstream. So if rather than just being on YouTube, I could stream to Facebook, Twitter, Twitch, like 50 other venues. Not that I'm on 50 venues, but I can. So this is, I'm so excited right now. I have to tell you, I'm like a kid. So this is my first comment from Facebook. Hello, Facebook. Saranyu, welcome, my brother. Thanks for joining in. Great to have you here. Share with a friend, okay? I'm not big into Facebook. I want to be. Share with a friend. Tell them about us. Thanks for joining in. Appreciate it. Okay, I digress. I apologize. You can tell I have fun doing this. All right. All right, so this is the Direction Emerging Markets. It's a leveraged ETF, but you can look at the EEM, same price action, less volatile. And we have broken out here. Now, the caveat I do have to say, if you're interested in getting long of the EDC on this breakout, here's the caveat. 20% of the EDC is mainland China. So just be forewarned. And they have their own, forget about tariffs, the trade war. They have their own major problems. All you need to do is go onto YouTube, type in China ghost cities, and you're going to see the overbuilding there is just incredible. And the buildings that were built less than 10 years ago, beautiful. You see the original photos of these buildings? They're crumbling. They're crumbling. They're falling apart. Whole cities. It's amazing. I suggest type in China ghost cities, and you'll be shocked. I digress. Again. All right, so EDC breaking out. I like EDC. I wish it didn't have so much of an exposure to China, but I think that this China, I think President Trump blinked on that last trade deal announcement that he had in the Oval Office. And I think what he's doing is putting the trade tensions to rest through the, yeah, no doubt, Clouded Trader, you got it, brother. That's a housing brother. That's the mother of all housing bubbles over there. And their banks are so illiquid, it's ridiculous. The president's probably going to keep on the back burner these trade tensions until we get through to the 2020 elections. After that, I think the floodgates are going to open up on volatility, and that's when I'm going to be looking to short this market. We did short a position yesterday, and I'm going to go over it with members at 7 p.m. tonight. We're going to go over our positions, and we'll discuss our strategy. So members, 7 p.m., I'll send out a link in a little while. So EDC looking good. Housing. I was bullish on housing going into the week, and we have a continuation move higher here. Yields are higher on the week. They're off the highs of the week, which is good. That's putting a bid under housing. Really pretty chart here. The problem is that when you take a look at individual names like KB Homes, KBH, they're very, very overbought. RSI on KBH, 84.29. It looks as though we're going to head higher here. I would not short this name, despite the fact that we have RSI this high. In all probability, we are heading higher. Volume is dropping off. Now that I'm looking at this, as I begin to see topping action, if we begin to see RSI move above 90, I'll probably look to scalp KBH as a short, but not right now. Strong stocks tend to get stronger until they don't. That's the lesson learned. So over my course of trading, RSI above 80, or some of these guys, these books, technical analysis for dummies, RSI above 70, sell your stock. That's nonsense. Don't ever listen to that. Stocks that go RSI 70 plus are going higher. So don't listen to that rule of thumb. It just means it's a strong stock. When you begin to see it put in lower highs, that's when you begin to worry. But we're not there yet. KBH is going higher. I wouldn't buy it, though. Way too speculative as a long trade. If you're going to trade it as a momentum trade and use a trailing stop loss order, go for it. In all probability, you'll make money. Just use that trailing stop loss order. Let the market take you out at the high. The bank's weekly view, attempting to break out here. Shocking to me that yields are this low and probably going lower, and the banks are still trying to break out. Granted, the leveraged ETF, the DPST of the regional banks, pulled back today. You can see we're well off the highs of the week. So I don't know how regional bank earnings have rolled in so far. They may be good. I haven't done enough analysis. I wanted to buy them. Right now, this chart is telling me avoid like the plague because we're well off the highs of the week. One trading day left to go. This is a leveraged ETF. It could rally back for all I know. I'm not drawing any conclusions yet anyway. The tips. All right, so for new viewers out there who aren't familiar with the tips, they're Treasury inflation protected securities. Investors buy them when they want to hedge their portfolio against inflation. Now, I was pointing out back here when the tips were breaking out, we'll overlay gold. And this is another measure of how I measure the probability of gold moving higher. I forgot to behind price. Duh. Okay. So you can see here on a weekly view. In fact, let's do this. Let's go to a monthly view or quarterly view. Let's even do that. Really high level stuff. Okay. So you can see that on a quarterly basis. I mean, this is really, if there's a macro trend, you're going to see it on a quarterly basis. And here, it's quite obvious, right? Gold and the tips rally together. There is no doubt about it. And you can see that as the tips corrected, gold corrected, they each consolidated, but the tips began to break out first. Now gold is playing catch up. Back to the weekly chart. So this is why I watch the tips. What the price action on the tips tells you that the smart money, meaning institutional money, is out there. They're buying a protection against inflation. So Jay Powell can come out and tell me all day long, Bob, inflation, Jesus, we can't hit that inflation target. It's crazy how we can't do that. That's not true. All you need to do is pull up TIP, the symbol, and you can look at what the market is telling you. The market is telling you on this chart, we have a tremendous amount of inflation. That is why gold is rallying. That is why we had the Federal Reserve in there propping up the banks because the banks can't make any money on mortgages because their NIM, net interest margins, are so horrible. And they need to rely on trading. That's why they just recently loosened up the trade, their ability to trade. I forget what it's called at the top of my head because I'm a bit nervous again. Now I'm on the spot. All right, so this is why I get nervous during live streams. Normally, if I was doing this recorded, I would just go to Google and refresh my memory. But they loosened up the ability of the banks under Dodd-Frank to be able to trade a little bit more liberally. And of course, with that comes dire consequences, which you and I are on the hook for, the taxpayer, when everything goes bust. So they get all the rewards, we get all the risk. It's a great business. So the tips, looking good, consolidating. Expect a breakout here. I'm not loving the Stokes. I am concerned about the Stokes. When they cross down below the 50 level, you already have the fast line down below there. That is a concern. So I have to say that. We don't speak our book here. Volume light. Gold. All right, so here's the Pimp Mac Daddy for me. Gold, bullish key reversal. Let's make sure this is updated. Bullish key reversal on the week. It looks as though we've bottomed out. We closed out the day above the 1500 level, which is critical. Now, would I be a buyer of gold here? Probably not, because you'll be buying, granted at the highs of the week and on a great candlestick, but you'll be buying in all probability on a continuation move higher up and into resistance here. So I think that the best path to take if you wanted to buy gold is to wait for the weekly breakout and then wait for the pullback and a retest of the breakout point, which is this line here in blue. And if you wait for that breakout and the pullback, in all probability, you're going to get in if you wait for the retest of support at around the 1500 level. Not much different from where you would be buying today. So your risk versus reward is best if you wait for the breakout, the pullback, then buy, because you're buying on the fact, you're buying on the event. And the event is twofold. One, it broke out, ideally on volume. Two, it's pulling back, retesting and holding. If it doesn't hold, you need to stop out on a close on a weekly basis back down below this support level. If that occurs, you have a problem. I have a problem too. So ideally, you break out, you see a pullback, retest, it holds, then in all probability, we're going off to all-time highs in US dollar terms, in Aussie dollar terms, in Canadian dollar terms. We're already at all-time highs on gold. Let's go to the GDX. This is the gold mining ETF. We're long of the leveraged ETF. And we are right at resistance, very close to a breakout here on a weekly basis. Now, I drew this earlier. You know, again, I always like to preface what I say here. I don't like to speak my book. I'm not a slick back, well-dressed salesman that goes onto CNBC trying to pitch you something. I'm long of the gold stocks. I want to see the gold stocks go higher. But I'm going to say, you know what? Volume is not wonderful this week. I'm not loving the volume. So I am a bit concerned about that. In terms of price action, this is beautiful. It's absolutely beautiful. Would I be a buyer here? No, you can't, because you'd be buying into resistance. Again, wait for the breakout, wait for the pullback, because that's when I'll be looking to add more to our gold mining trade. We bought more of our gold mining position last week on the sell-off at support, and we've rallied back. We're positive on that trade from last week, and we're positive on the year. Very big on the year. Last chart up is going to be copper. And copper is looking rock solid. And the reason why I'm looking at copper is because I'm looking for signs of global growth, which copper certainly is an indicator of. They call it Dr. Copper for a reason. But copper, when it rallies, is also inflationary, right? There's a demand for building goods. So we saw oil strong. We saw natural gas bottoming out. I know for a fact that corn began to move higher today. We saw, in essence, inflation signals. Oil moved higher. Gasoline is moving higher. Home heating oil is moving higher. I called. I'm going to show my bill in a couple of days. I called my home heating oil company. I said, come now, fill up my tank for at least a portion of the winter. I want it filled now at these prices because I'm arbitraging current price versus future price on the contracts. So that's it. We went a little bit over here, but we had one request, and it was a new fellow, so I'll be more than happy to Adrian, big cool down, below zero temps coming into Dakotas, and below average for 80% of U.S. for nat gas, and so that's a great point. So this is the value of the live stream, getting feedback like this. Bill, natural gas had a decent report today. Okay, that explains the bid. What do you think it means when the central banks cancel the buy-sell restrictions? They getting ready for a gold standard, prepping for a crash and or liquidity problems? I think it's all about control. I don't think that they are anywhere near announcing any type of a gold standard. If they did, they would be the most stupidest. And you know what? What am I saying here? They really don't have common sense, do they? But if they announced that in any way that they had an intent to go back to the gold standard, first off, you would see the dollar rip through the ceiling. And that would crush the economy in the short term because our exports would be demolished. Manufacturing is already in recession, right? So they're not going to do that. The other reason is that to go onto the gold standard, we really need to be out there buying gold, building up gold. So they would destroy the ability to front run their own order. So they would want to begin building a stockpile of gold beforehand, and it doesn't look apparent that we're doing that. So to me, any restrictions are a restriction on the market and our ability to allow this market to go into free fall. It's all about control. Sam, talk to you in the morning, pals. Have a great night. Sam is over in Italy. Thanks for joining in. 12 midnight over there. Okay. And I believe the one symbol that the new fellow wanted me to do, and I forget the name, there's a lot of comments here, was to look at the pairs trade on the Swiss franc. I don't know if I have it up here. Swiss franc. I'm not seeing it. I think it was the Swiss franc versus the Canadian dollar. I'm not seeing it. Let me, if you join us in the future, I'll research the symbol and I'll do it for you. Just make sure you follow me. If everybody could please, if you watch us on YouTube, give a like, subscribe to the channel, and share with a friend. That helps out a lot. But I will get back to you. I believe it was a Swiss franc. Let's go back to this. And there's a lot of comments here. I don't want to hold everybody up, and we need to get to a 7 p.m. program. I'll look it up for you. If you join me tomorrow morning, I'll go over for you, and I'll get that answer for you on that pairs trade. And members, let's expect an email in about 5 minutes, and we'll go into a member stock chart request session. So join me there, and I will speak to you in a little while. Everybody else, thanks for joining in, and join me on all my live streams. I love having you. And again, there's a email list in the chat box. I'll post it there again. Get an invite from me, and that way you never miss a CADS. All right, so the Canadian dollar versus, let's see if I can do this. All right, Canadian dollar versus Swiss franc. We'll wrap up with this, and then we'll go into the members group session. I like to begin with a higher level view, weekly view. This is I can already tell it's a beautiful chart. All right, so we have a breakout here on a weekly basis. RSI is validating the breakout. It is also breaking out on a weekly basis. So this pairs trade here looks very, very good. And what's going to help strengthen this trade is the fact that you have precious metals, you have metals in general that are beginning to rally. That is going to bode well for the Aussie dollar and the Canadian dollar in particular. So on a weekly basis, this pairs trade looks very, very good. Canadian dollar looking very good. Daily chart, a bit extended here, but looking very good. I think it breaks out higher. Bullish reversal day. So far, this is the 25th price action. No new daily high yet, but close. 4-hour basis. Bullish reversal bar. This bar here, no new daily high yet, or 4-hour bar, sequential high. But net, I like the pairs trade. Canadian dollar looking very bullish. Thanks everybody for joining in, and I will talk to you tomorrow. Be well.